celebration of APIs hosted by Marquetta. So today we are exploring the future of payments, a broad topic, but a very interesting topic and one of my favorites. So, as always, I'm Liz Lumley of The Banker, and we have a wonderful panel here for you today. So, we have people representing Alloy, MasterCard, and Ross Republic, and they will very soon introduce themselves to you. So, as I mentioned before, we are looking at the future of payments. Transformation continues apace with ever more innovators bringing new digital ways to pay the market. Use cases for novel payment methods also continue to expand, and it's likely that the long term future will deliver incredible changes thanks to the widespread adoption of embedded finance. Today, we're going to delve deeper into the future of payments and get the perspectives of our panelists. As I mentioned before, this is a live stream, API Live. So you can please, you can answer, put your questions into the chat function. A bit of advice, the best questions are short, concise, relevant, and more important, a question. And they will be more likely to be read on air. So let's get into our panel. So I would love all of you to introduce yourselves. And Edwina, why don't we start with you?
Hi, I'm Edwina. I head up global expansion at Alloy, and Alloy is identity and risk decisioning for the financial services industry.
Wonderful. And then Michael, please introduce yourself. Are you on mute? If we can't get to you, we can go to Masso first, and then we'll come back to Michael if he's having trouble with his sound. So Masso, why don't you introduce yourself?
Sure. Hi, my name is Masso Barry, and I'm partner at Ross Republic. We are a strategic consulting company, and I focus on operations and ecosystems.
Wonderful, perfect. Michael, how are you doing? Do we have sound for you yet?
Michael looks like he's potentially frozen in some kind of death stare.
Okay, so we might be having some small technical difficulties, but we'll hopefully get back to Michael very soon. But we can start in with our discussion with Masso and Edwina first. So as I mentioned before, we're talking a little bit about the future of payments, but I wanted to go back a little bit to the past of payments. I've talked before that my first experience with a bank was having those lovely passbooks that were typed out by a teller. So I'm going to start with you, Edwina. You know, when was the last time either you used cash or when was the last time you entered a bank branch?
Yeah, cash, definitely paying babysitters, going to a bank, doing some of the most painful transactions ever. And I think that has to be like, that's the definition of going into a bank. It's like the highest friction experience that you can have, right? And why, you know, at Alloy, we see so many folks moving to digital banking, but, you know, on the flip side, all that becomes easier to use and more streamlined, it then opens up this whole world of fraud and payments is no exception there.
Okay, it's very interesting. I agree with you. You enter a bank branch when you have a difficult problem. So it's a place of pain.
Something you didn't think was a difficult problem and then instantly becomes difficult because you're in a bank branch, or the fact that you just had to go to a bank branch is challenging.
Exactly, and wait in line. I'd love to go to Masso. Please, tell me, when was the last time you used cash or was inside a branch?
Last time I used cash actually was in Italy, in Milano. I had to pay taxi with cash, and it was a month ago, and they had the kind of a point of sale, but it didn't work. For some reason it happens in some countries that the point of sale doesn't work and you have to pay cash. That was the whole journey. But using the branch, it was about a year ago or so when we were to sign for a loan for a house, and it was strange because it was hard to know how you behave in a branch, because branches are a bit different nowadays, and understanding where you go, where you find the people. There is less people, there is more electronics and commercials and all that. Was it painful? It's always painful to go to a bank and get a loan because of the interest. You want it the other way around, But did it work out just fine? Yeah, at the end, of course, it was a pleasant experience.
Yeah, no, it's interesting. And I know that there are lots of regulations still on the books that require you to go into a branch for
Exactly.
things like mortgages and house loans. But I'm going to stay with you a bit, looking at the sort of short to medium term. As I mentioned at the start of our discussion, that payments is a really huge industry, and there's been lots of innovations in the payment space, from looking at the growth of faster payments over the past decade and a half around the world, and then you move into cryptocurrencies and the whole decentralized finance space. Where do you see some of the real change happening now beyond just some digital wallets and cryptocurrencies? So I'm going to stay with you, Masso.
I think the bigger change perhaps is becoming the fact that there are two sides. There is the kind of payments in a corporate business, and then you have payments in the consumer business. And the change that we have seen, and we will probably see more and more, will happen still on consumer side, where fintechs will become more active in this space and gaining more market share. Where on corporate side, I still see banks being of huge relevance for entrepreneurs, for small and medium players, for corporates, because it's part of a bigger deal. Payment is just one part of it, where the whole cash management, working capital, liquidity management is something that banks are definitely best positioned to keep. So from there, how fast then new players will come to the play, it's hard to say at this point, I would say.
Like it is. I do agree. It is kind of hard to say. But I mean, maybe we can get more insights from the other panelists. And we know, where do you see some of the real change happening in sort of that short to medium term?
Yeah, so I actually think it's going to be more challenging for the banks, particularly with the payment changes coming from open banking, particularly the variable recurring payment. And I think that will fundamentally disrupt the relationship that consumers have with their banks, because they're going to be moving payments into other brands or other places that they would normally go to banks for. And I pulled out this quote from Ginny Chapel, who's a senior VP digital payments at FIS, who said, "We've entered a new era of instancy, and every organization must understand the business case for real-time payment and how it adds value." And we're absolutely saying that. It's like not just banks anymore. It is like every single brand, and how payments and how kind of embedded payment sits within them.
No, it's interesting. We're going to get into that further on in the discussion, that sort of real time everywhere all the time in terms of payment. It's an interesting journey we're taking. I seem to see that Michael is back with us from technical difficulties, but I'd love to get your viewpoint on where you see some of those core changes happening in that short to medium term time frame.
It's a great question. So I think there's been a lot of, we talk to clients a lot about particularly what's coming next, around the next corner. So if you think about the ubiquitous nature of digital, and obviously we cannot have this conversation and talk about metaverse and other digital elements, payments are becoming more granular. So we're starting to see the need for micropayments, much more smaller experience-driven payments, just because of the sheer frequency of payments that are going to be happening in the next 2 to 3 years. If we think about payments historically as a human-to-human transaction, we're heading into a place where machines now are making payments on behalf of people, or are now part of that circle in terms of payments. So we're seeing, and even data itself, becoming a form of currency. So we're working with a lot of clients and seeing it globally, new emerging with different propositions, because in some respects, the value now is sometimes not in the payment, but it's what actually you're adding to the payment that actually is giving the value. And also, how can you expand the engagement, right? So we think of payment historically as a transaction that just happens between two parties. But now the question is, how do I create stickiness beyond the payment and keep engaging you after the payment has happened, or even before the payment's happened? So we're starting to see a shift in terms of not just how you pay and the mechanisms you're using to pay, but also the engagement you want to have around the whole payment journey, and where does that fit? And in some respects, does that even become invisible, because the journey now becomes even more important than the payment itself? So all of these things are starting to emerge through combinations of technology, convergence of industry. I know we're going to come on to a little bit about embedded finance. All of these things are bringing in adjacencies and almost making payments now not a standalone thing anymore, but they're just part of a broader journey of what someone's trying to experience. And these are some of the things that we're seeing short, but also medium term in terms of as the role of value starts to change and shift.
I'm glad you mentioned this kind of idea about data as a form of currency, because I think that kind of leads us down that path to looking at digital assets and looking at cryptocurrency. So I'm going to stay with you, Michael, for this next question. It's kind of, cryptocurrencies have had kind of a rough ride of it over the past year and a half. But is it not all bad news? Do you think that cryptocurrencies are becoming more mainstream right at the moment, do you think?
I think it's, the numbers back it up in terms of the mainstream element. Like the role I know we didn't do intros because I lost my connection, but one of the roles I also play at MasterCard is a data futurist. So I look at the future of data and the future of value. And when I think of data, what excites me about crypto in some respects is more the tokenization part of crypto. So where everything now becomes a token, even data itself could become a token of exchange. I think one of the good things that's come out of the crypto winter, as you want to refer to it, is it's now caught the lens of the regulator. So the regulator now is actually now coming on board and putting things in place to put some regulation around these things. So these aren't bad. Obviously, we feel for people impacted, but going forward in terms of the growth of this industry, regulation is critical for trust and adoption of any currency. And I think that's been one of the big pluses in terms of the crypto winter, in terms of the regulator now trying to get an understanding of this space and the adoption. If you go back to the role of tokens, these are now almost becoming a means of utility as well. So these are becoming a way of how you access services and how you use payments. So tokenization for me is probably more interesting than cryptocurrency. But I think the crypto, when we look globally at central banks and what's trying to be achieved, the obvious path is central bank digital currency. The UK, for example, is building one of the first digital clearing houses linked to the digital pound. So, this isn't going away anytime soon. It's almost becoming more industrialized and having regulation wrapped around it. And I think the tokenization component that links to this will be huge, particularly if you think about communities and how people will trade with each other. The token element for me is equally as important as the cryptocurrency side, and even your identity in terms of how you manage that going forward, which is a whole other topic in itself.
Yeah, I know that's a whole can of worms, but no, it is a really interesting journey. I'd love to get Edwina's thoughts on this. How big is your crypto wallet, or do you have one?
So it's gone up and down over the years, but I totally agree on the regulation point. I think regulation is really important in driving adoption of cryptocurrency, and it's needed to give folks the trust in cryptocurrency and also give them the protection and feel that that they have protection, particularly again on the fraud side. The other two areas that I think are going to be really important here are access. It's still pretty challenging to get access to cryptocurrency for the average consumer, and trying to make that more accessible for people. And then the third element is stable coins, and kind of seeing something that's a little bit more pegged or regulated, or which has more kind of clear oversight or pegged to fiat.
I mean, it's interesting. I've seen this real movement, this almost split between people that are still sort of holding on to crypto assets, and then people are trying to find that path to it being a payment mechanism, which was, ultimately was supposed to be the goal from the very beginning. So I'll move on to Maso now, because we mentioned we're going to be talking again about embedded finance and embedded payments, which everyone agrees is an absolute huge growth market for possibly the traditional banking network, new banks, fintechs, and the wider industry. More importantly, probably the retail and e-commerce industry. So what is the short-term today future for embedded finance and embedded payments? Maso, if you could comment on that.
Sure. I think Michael put it very well, that before payment was a transaction, and now more and more, whether we talk about banks or PSPs or retailers, they are looking at what's happening during the whole purchase to pay journey or order to cash journey, before and after the payment, and trying to make payment as invisible as possible. Because I mean, at the end, nobody likes to pay, but you like to get the product that you want, and making the payment kind of process go away one way or another, and then helping the consumers to actually reach that desired product or service or whatever they want faster, makes this such a topic that more and more, I think, retailers, e-commerce partners will look at it during this year and during coming years, whether we talk about the embedded payments or embedded finance as kind of a new type of BNPLs or save now, pay later type of approaches that would help the consumer actually reach their desire faster. So I see that as being part of the whole customer journey, rather than payment itself being the center of the change that is happening. Because at the end, you won't make that process as smooth, as fast as possible from the beginning until the end, and afterwards as well. So the shift that I see is retailers becoming partners of financial institutions, and the other way around. So building a kind of a partnership ecosystem together.
Yeah, I wanted to go back to Michael. I mean, it's very, MasterCard's very much part of that trust network, and that term comes up a lot with embedded finance and embedded payments, where do you trust the entity that is offering you some sort of transaction or financial service? I mean, like how big is embedded payments right now in this sort of short-term current environment, Michael?
I think it's growing massively. I think Massimo covered it really well, is that it's becoming a vehicle to get into adjacencies as well, because I can now expand my reach because of the payment component. IKEA, for example, many years ago bought a stake in a bank, which was like 40% for the sole purpose, you can imagine, to bring payments and own a bigger chunk of a journey, not just about buying products within the IKEA environment. So off the back of embedded payments, almost as the vehicle for this, is the emergence of bank as a service. So in essence, banks are now exposing their capability to enable startups, even retailers, to start offering financial capabilities to their customers. So a whole industry is starting to form around embedded finance, either to jumpstart the companies that actually want to offer finance, or as a means for banks to actually create a new revenue line, which is almost bank as a service. So it definitely seeing growth in the short term around embedded finance. You'll definitely see it in adjacencies. So, perfect examples would be things like taxi companies or retail environments, where again, you're just expanding the engagement or bringing more choice to the consumer. And open banking was a key part to that journey, in the sense of giving the consumer the choice how they wanted to pay. So that wanting to pay and how to pay almost now suddenly becomes part of the overall journey. So definitely embedded finance is here to stay. It will become a revenue line for some as an offering to enable people to get there. And for others, it will be an extension of the journey, which allows them to be part of a consumer's longer term engagement.
I'm going to stay with you, and I'm going to go off script just a little bit, but it follows on from what you're talking about with embedded payments. You also use the term banking as a service, and I've been talking to a few people over the past weeks. Do you see a difference between embedded payments or embedded finance and banking as a service, or are they interchangeable terms?
I think there's a subtle difference. So I think embedded finance almost becomes the end product. So it's almost like what I can embed into a journey, whereas bank as a service is the ability to offer banking services to others who may not have a license, or they just may not have the capability in the first place. It gets even more confusing because it can be finance as a platform, because you're then not offering the license, you're just offering the financial components as a part of it. So I see one as a whole business line for a bank or for a fintech like Starling of this world, who are built from the ground up as a fintech technology company. Because of the modular nature of their business, they can now offer, maybe they do KYC better than anybody else. So I'll offer that as a service, for example, to you. you on receipt of that then can suddenly start performing those services to your customers. So there is a subtle difference. I look at it as the embedding as the finance, as the component that goes into the journey, as the propositional element. The bank as a service almost becomes the enabler of that journey for someone else to consume those products. It's a huge market. We're talking billions of dollars in terms of as you look forward to the medium term. And it's becoming a means of jump-starting digital transformation for organizations as well, because historically the big problem, as we know, has been legacy, and the difficulty of unpacking that is often prohibitive for most companies, either from a cost or just risk. Having the ability now to consume a service from someone else reduces that risk factor, but also increases your speed to market. So there is a subtle difference between the two. Sometimes they get often interlinked because it's almost like the cart before the horse. You might need one before you can get the other, sort of thing.
Mm-hmm. So in keeping with one more off script question I had, and maybe Masso would want to chime in on this. We're talking about payments, and we don't have a traditional bank on the panel. Is there, in that embedded payments landscape, is there a place for the incumbent banks at all, or are they going to be left behind?
I don't think they will be. Go ahead, Michael.
No, you go ahead, honestly.
No, I don't think they will be left behind. I think the way they will be traditionally working will be different. Michael brought a good example of IKEA buying 40% of IKEA Bank, which is one way to bring the traditional bank to make it more kind of a presence in the retailer business. So I think these kind of things will continue to happen. That banks as traditional, especially traditional banks or income banks, will become part of a bigger ecosystem in order to play a role in the payment business. Payment is door opener for many of what's happening in this industry. So one way or another, they need to consolidate two different type of ecosystem in order to survive. I don't think they will go away in any way.
Yeah, I agree. And I think, another example which builds on that is, nobody really wants a mortgage, right? Everybody wants to move home, really. So using embedded finance and some of these capabilities, could a bank own the entire moving home journey? So could they stitch together all these different services? Now, the incumbent who I trust as a consumer now is not just offering me the mortgage, they're offering me the whole thing end to end, and giving me the service and even giving me access to my house and everything else after the service is done. Or could the bank decide, actually, that's too much like hard work. Maybe I'll embed my payment into somebody else's journey, which could be a moving home journey. Now, all of a sudden, my brand is visible in an ecosystem that may be locked to me. And maybe that consumer is more likely to trust me because my brand is more well known in the ecosystem. So this all comes back to trust, brand awareness, and how that incumbent wants to show up in these new spaces. But there's definitely a role to be played, because I think everything comes back to trust in some respects as well.
No, I know trust is always a big word whenever we talk about financial services. But I wanted to move on to another word, which is access. And I'll go to Edwina for this one. I mean, the payments landscape is evolving all over the world. Is there a threat that will leave some groups behind, or how do we ensure that doesn't happen?
Yeah, I think when you think about access or leaving people behind, there's kind of two angles to look at it. There's one which is the financial inclusion side, so thinking about consumers, and that probably goes back to our earlier conversation around regulation and accessibility, and bringing some of these newer technologies or newer ways of paying into a more accessible format for folks, and particularly providing protection around fraud in new environments where fraud often has the upper hand. And then the second way of looking at it is around institutions, so protection for smaller depository institutions. I think the faster payments in the UK quadrupled their transaction limit to £1 million in 2022. There's a lot of risk to take on for a smaller bank, and you want to make sure that those banks can compete with larger institutions. So, doing a lot of work in the US, we're looking at what the US is learning from that. And when FedNow launches in July, they're actually only starting with like 500K as their limit, which kind of reduces the risk that smaller depository institutions are going to take on, and just makes it slightly more easier to compete.
Yeah, there's the U.S. is having its own debate right now on smaller institutions and deposits as well, but that's another live stream. But exactly, but it's interesting in terms of fraud, for example, with faster payments. Once that payment leaves, it's very difficult to grab it back if there's something criminal going on. So, Michael, I'd love to hear your views on this about how we ensure that people aren't left behind.
Yeah, so it's all, to be honest, the financial inclusion point was raised. It's still a problem. I've always felt it's something that needs to, on a personal level, there's something that needs to be addressed, because there's still a huge percentage of this world that don't own a smartphone. So, the deeper we go into a digital world, the chances of the haves and the have-nots, that gap could widen if we're not careful. Some of this may be solved through telco and finance partnerships to ensure that people have the appropriate access to make payments. Part of the other issue is identity. So, you need certain credentials to even have access to a bank account, even access to make a payment. So, markets around with M-Pesa and other things in South Africa, they try to solve that problem using SIM cards and things like that to actually expand reach. It may require innovation and collaboration and I think that's the key word, collaboration, to enable people to actually have the access they need. Particularly when we think about data in terms of the amount of footprints you may have to create to know that it is you from an identity perspective to make a payment in a world where data and payments become ubiquitous, and more your digital smartphone or your AR glasses becomes your entry point into that world. I think we've got to be mindful as we start designing and develop these things that we also are catering for people to have full access. So ultimately we can create a sustainable ecosystem so that everybody can make a payment, everybody has access. I think that's a bridge we have to cross. And I think that's a cross collaboration of industry to solve that problem. It's not a problem that's not new. Financial inclusion has always been there and always been a challenge to tackle. I think it's something that's going to become equally more important the more we rely on digital services going forward, I think.
Wonderful. So before we move on to a discussion a little bit about regional differences around the globe, let me just remind the audience that we are live. So if you want to put in a question in the comments section, please do. I'm checking back and forth to see if anyone has a question. So we have plenty of time for those if you have them. So I'm going to go to Masso now. I mean, this is whenever you see someone present and talk about payments on stage, they usually bring up China and WePay and WeChat, and there's a very Asian model which is linked to QR codes, and sometimes it's very much linked to your social activity and status, which is frightening for some people. It's frightening for me. But then you have the Western strategies with the expansion of faster payments and digital wallets. In the long-term view, what do you see winning out, or is it a case of a different strategy winning out? Can they coexist globally? What do you think the long-term view?
I think in long-term view, it will be a kind of coexist. Michael brought out a good example of accessing to the bank and having access to being able to pay. If you consider why Alipay's, WeChat Pays were successful in China, is because they offered the payment system beyond banking. You didn't need a bank account. You needed a QR code and a phone that can read the QR, which is a totally different concept for Western, where we are used to card and used to digital. So for a QR code to really become more kind of accepted in Europe or US, it requires a big player and retailers to actually accept it in order to that become a kind of mainstream. Where I see in, let's say, in less developed countries like Africa and else, definitely could play a bigger role because it's more kind of user friendly for them without having a bank account to be able to do the transfer of payments in this context. So it will become more mainstream, but not necessarily in Europe. Outside Europe, surely, I see it as a trend.
I'm going to stay with you for a bit. I know I asked you the traditional bank question earlier, but I'm going to ask you the fintech question now, a kind of a non-bank fintech. Who are some of the companies that you're watching that are really driving payments innovation globally?
Well, there are the obvious ones like Klarna and Stripe, and you could say basically the ones that I'm watching are the ones that are into more and more getting into the embedded payment and embedded finance. I take Klarna as a good example. They started as a payment. You could consider them as a BNPL service provider, but they are getting into actually data business than being a payment service provider. Data is key for them in order to promote different type of brands and purchases. So as Michael brought it up, perhaps is that payment is actually shifting to more of kind of data rather than payment. So I would look after the companies that work with payment data and trying to provide more access to fintechs and banks on how you can improve purchasing journeys with that data. Klarna is the best example that I have at this point, and I follow them quite well. Of course, then comes Apple Pays and Google Pays. Apple Pay again, particularly Apple Pay, I consider as a fintech, not as a big corporate company, because they are new in the space.
I agree. You know, I'm very closely watching the Apple Goldman Sachs partnership, which I agree with you. I consider that the fintech part of Apple. Interesting. But moving on, I want to talk a little bit about security. You know, we mentioned a little bit about fraud earlier, and I'll go to Edwina for this. How do you think payments will evolve where some of these institutions will be custodians of identity? Is this something that you think will eventually evolve and become mainstream, or like where do you see the future for that in terms of identity?
Yeah, I think about it. When we think about identity, Alloy, we think about identity underpinning all of these security and fraud components, right? So quite often you think about fraud from a particular payment or a particular transaction that happened. And actually you want to be thinking about who is doing that fraudulent activity, because at the end of the day, it is an individual and you want to be focusing on that identity. So the identity becomes much more important when you do think about fraud. And, you know, generally within fraud that exists, payments, you know, is subject to all the same kinds of frauds that are out there. But obviously instant payments has much more of a challenge, and particularly I think APP fraud is probably seen as like the biggest type of fraud that exists in the FI at the moment, or one of the most challenging ones to deal with. So you've got to think about how you can combat that, and there's ways you can do it that are similar to tackling other payment, but are definitely looking at real-time fraud detection capabilities, focusing on that identity, and thinking about suspicious accounts that you have and putting them on watch lists and things. But yeah, taking it back to the actual identity that underpins the fraud that's happening.
What about staying with you a bit? I have a bit of a follow-up question. You know, outside of fraud, I know there are a number of people that talk about banks and payment companies, you know, holding onto your identities to for things like age-restricted items, for example. You know, maybe someone who's 15 trying to buy alcohol. Do you see any future for that, or is that probably something too contentious for a certain population?
Well, yeah, I think it depends on, it goes back to your question around QR codes and payment evolution. So I think it depends on the culture and the society in question. So obviously in the Nordics, you've got identity consortiums that have either been set up on a government basis or a bank basis, and then folks can call those consortiums to do identity verification. But will you get certain countries, such as America, you know, like, you know, there's certain societal beliefs that you have to either give all your identity information to be stored and trusted either by commercial entities or by government or federal entities. So I think it will depend on the country there.
So culture eats innovation for breakfast, unfortunately. Michael, I'd love to hear your thoughts on this about the custodians of identity as part of that payments evolution.
This is one of my favorite topics. So I talk to clients a lot about this. And even interestingly, I dare to use the word, but the PSD3 mandate questionnaire also asked questions on identity wallets, which was really interesting to see. I think there's a role for a bank to play as someone's identity custodian, particularly where I don't even have to show my identity in the world that we're heading to. So a bank knows everything about you. And it doesn't even have to be your bank. It's anybody that you trust to manage your identity will be the person that verifies your credentials. So today, for example, my identity is verified. I don't carry my identity. I just carry my debit card. The credentials are validated that my identity by my bank based on a set of criteria that I complete. In a world where I don't actually have to show who I am, is where we're heading. If you start thinking some of the digital story, wouldn't it be great if a bank verified my credentials when I entered a nightclub and I didn't have to show anything about me other than the fact that I'm over 18 or over 21? Verified by X, because they hold my identity, they hold all my information about me. So I think as people start to own their own identities, there's an initiative in Europe called Gaia X, which is all about self-sovereign identity coming out of the EU. So, the path points to, that's an extreme example, but if people do own their own data, they own their own identities, then there are roles to be played. And who do you trust the most? Probably your bank, ironically, because they have all the data about you. So would they become the ones that would manage your identity? Would they manage all of those things? Who knows? But it's interesting to see legal documents actually refers to these things, and legal terms being used, particularly within PSD3, where they're actually asking questions about identity wallets, all of these things. So, I think it's going to be a topic of conversation for years to come in terms of how we manage people's identity. I think, as Edwina rightly raised, some countries will adopt this more than others. Why? Because they've already got the infrastructure and they already have a single ID, which is a digital ID, already as part of their mandate. Some other countries don't have that capability. So does that mean then we have different versions of your identity number kicking around? Who knows? I think this is just an evolution. I think in the short term, we have to prove and make sure someone is who they say they are when they make a payment. And I'd also think about identity. Identity is changing in a way. Identity is also a means of social proof. It's not now just a means of proving I am who I am when I make a payment. It's also I want to show off something I bought or someone I am. So there's this real paradox emerging between, we've often thought about identity as a means of protecting you, but identity is now actually how you show yourself on social channels and various things. So
it's like the whole Venmo thing in the US,
Yeah. Yeah. So there's lots in this space, but I think, Edwin is absolutely right. I'm always a huge believer is everything comes back to foundations. How are you protecting your users? How do you know who they say they are? Are you doing the right things? Everything else that comes are things that we can't possibly predict, but we're just making ourselves ready for when they do happen.
So we're gearing up for our final question. We really didn't have many questions from the audience, but we had a few comments, which was from Teresa Kushner. So glad to see the recognition of data as important to the future of payments. And then someone commented, agreed, Victor Patey, especially when combined with money laundering and AI capabilities. So people are commenting and very much enjoying our conversation, but they don't have many questions to ask you because we're answering all of them for them. So we get to our final question, and it's basically kind of my final thoughts from each of you, and it's maybe a little bit of a negative question. So Michael, I'm gonna start with you. In terms of the long-term future, what do you not want to see? What are you hoping does not happen with payments?
I'm the eternal optimist. so this is probably a difficult one. I think what I hope that doesn't happen is we create a basis that not everybody has access to make payments. That's my hope. My hope is when it comes to technology, we have caution when we create things. Just because we can doesn't mean we should. And as we create these new forms of payments, I hope that we're mindful of that we're creating something that everybody has access to. So I would hate for us to make extreme advancements when it comes to payments, but we create almost a haves and have-nots society when it comes to payments. So I think that would be, for me, a negative that I wouldn't want to see in years to come, as in we push so far forward, we leave large parts of society behind. And I think that's something that we do have to address and get right. So that for me would be a negative in terms of what I would not want to see when it comes to the future of payments, or even data usage for that matter.
No, I agree with that as well. So I'm moving on to Masso now. I'd love to hear, what do you hope doesn't happen?
Well, I hope that the foster and wrong usage of payment technology wouldn't drive the regulation to such an extent that it would be so regulated that it would be difficult actually for different type of innovations and players to come to the market, and then driving the way that accessibility to payments or banking facilities wouldn't be able to happen as fast as we want. So trying to balance that regulation would balance and understand that how and where it should play a good role and regulate us, and where it should try to push for innovation.
Interesting, wonderful. So, Edwina, I'm giving you the last word on our discussion. I'd love to hear what you hope doesn't happen with payments.
Yeah. And I feel like the last two answers were much more noble than mine, which is more selfish, which is I don't want more friction because of fraud. I don't want to have to go to the bank more often and, prove my identity or prove this payment. I want, I think, fraud is massively on the increase now, and I want FIs to get ahead of it quickly so they can, we can have these payments in these really seamless ways, which are secure and protective and accessible for the end users without adding more friction into the process.
No, I agree. I got a call from my bank yesterday from some nefarious person who tried to buy a holiday on my credit card, and it was not me or my husband, which is very disappointing, but they caught it right away. Wonderful. So I want to thank our audience for listening and for the comments, and I want to thank our wonderful panel, Edwina, Masso, and Michael. It was a pleasure speaking with you today. Thanks.
Thank you, Liz.
Thank you.
Thank you.